can China and the United States decouple their economies? Until recently, this question would have been unthinkable, but in the past few years, it has been a regular subject of discussion. In a nutshell, this is the scenario where the world's largest and second largest economies unpick, or maybe even rip apart, the complex financial, business and economic relationship that they've built up over the decades. The idea has been around for a while, but it's reared its ugly head again recently as a result of the all-out trade war launched by President Donald Trump. US tariffs are now so high as to make Chinese imports unaffordable, and the People's Republic has responded in kind. Meanwhile, officials are questioning other aspects of the economic relationship, from the presence of large US companies like Apple and Tesla in China, to Beijing's ownership of large quantities of US government debt. So this week on The Big View, we're going to explore US-China decoupling. Is it avoidable? Is it inevitable? Is it even possible? It's what we do at Reuters Breaking Views. We tap our best sources around the world to bring you fresh insights on the biggest stories in economics, finance and business. I'm your host, Peter Thalassen. Our guest this week is Chris Beddor. Chris is the Deputy China Research Director at Gavekal Dragonomics, the independent research firm based in Hong Kong. He previously worked at Bridgewater, the hedge fund, Eurasia Group, and he spent several years covering China's economy and financial system as a columnist for Reuters Breaking Views. But before we hear from Chris, I'd like to introduce Yuna Galani, Breaking Views Asia editor. Hi, Yuna.
Hi, Peter.
So you took a close look at this decoupling question about a year ago, I think, and you've returned to it in a couple of recent Big View columns for Breaking Views. What makes you think this is a good moment to revisit this question?
I just think we've really crossed the Rubicon on this US-China relationship. The whole situation, as you said, this effective trade embargo and $600 billion of bilateral trade between the world's two largest economies is simply a risk that many people underestimated or doubted would ever materialize. And yet, here we are. And this giant trade war, what it effectively does is it puts all the other ways these two countries could pull apart into sharper focus. Will we see faster decoupling of corporate ties, financial ties? And I think it's really important here to remember that trade was the bedrock of the relationship. So if you remove that, the logical question is how does it reshape the rest of the relationship? Yeah. And these are all really, really important global, geopolitical, financial questions. And it's obviously something we're tracking very closely.
Yeah, I mean, the halt in trade is pretty dramatic. We're sort of talking as shipping traffic between China and the US has pretty much come to a full stop. But isn't it likely to be temporary? I mean, I've just spent a few weeks in Washington and New York, and everybody I talk to here thinks the tariffs will come down sooner or later. Even people in the administration are saying they're unsustainable.
Yeah, I mean, sure, tariffs could ease, but I think this just leaves a permanent cloud over the relationship. I mean, all the inclinations that China had towards building alternative trade routes and achieving greater self-sufficiency in technology will now be turbocharged. They're going to be on steroids. And the other problem we have here is that Washington is also cutting ties with China on national security grounds through all the export controls on semiconductors and curbs on high-tech industries, electric vehicles, etc. So it doesn't leave a lot of space for the two to cooperate. Companies and investors, I think, will read the writing on the wall, and everyone knows that the last trade deal between Trump and Xi was not successful. So even if they agree to ease tariffs now, the risk that those tariffs could return is quite high. And I think the world will treat that as a sort of like potential sanction.
Yeah. Okay, that's great. I mean, in a minute, we'll listen to your conversation with Chris Beddor. But briefly, just tell me why you chose Chris as a good person to enlighten us on this topic, apart, of course, from the fact that he is a distinguished alumnus of Reuters Breaking Views.
So I really love that Chris understands this topic from both sides, both from the US and the China perspectives. And that's because he has worked for research and investment firms in both Washington and Hong Kong. And obviously he's worked for us as well, which is fantastic. I think that rounded perspective is extremely valuable at a time like this when people can get trapped into thinking about it too much from one side or the other and get stuck in an echo chamber. So Chris really sees the big picture on this really well, and he understands the micro details, and that's why he's my go-to person.
Great. Well, let's hear your conversation with Chris. Just one caveat, bearing in mind the speed with which things can change at the moment. I should add that this discussion was recorded on April 30th.
Chris, thank you for being here with us.
Thank you for having me. It's great to be back.
It's great to see you. So decoupling is a big word that gets thrown around a lot in respect to deteriorating US-China relations. And we are hearing it more and more in recent weeks since America launched its global trade war. As of April 30th, when we're recording this podcast, the two countries have applied triple-digit import tariffs to each other's goods. But I suspect different people have different interpretations about what decoupling actually means. So let's start with a very easy question. How do you define decoupling?
It's a great and surprisingly complex question. So I think there's a few different things that people mean when they talk about decoupling. So the most straightforward one, and the one that I typically default to, is trade. So how many goods and services are crossing the two borders? Officially, that's a little bit less than 700 billion US dollars last year, which is a lot. That's the largest bilateral trade relationship in the world. And in reality, the figure is even bigger than that because there's a lot of small value shipments that are not captured in the data. There's a lot of transshipment through third countries. And there's actually a surprising amount of just straight up lying to customs authorities that we can see in the data. So one answer is that decoupling means reducing that trade relationship. But there's this other bucket that's sort of, in some sense, just the flip side of the same coin, which is investment. So that's investment by US companies in China, such as Apple, Starbucks, so forth. There's investment by US venture capital funds into Chinese tech startups or Chinese investment in the US, and everything from government bonds to mortgage-backed securities. So in that sense, decoupling is about limiting or reducing those investments. And in particular, it usually means limiting American investments into China. The other major bucket that I would point to is technology. So there's still a lot of sales by US tech firms to China, and even though some of that is downgraded equipment. And there's a good amount of collaboration between American universities and Chinese universities. There's a lot of Chinese citizens in particular that work at US tech companies. There's a lot of other linkages that go on and on in the tech realm. So you could continue to list other forms of decoupling, such as people-to-people exchanges, but I think I'll stop there. And I think it's helpful to disaggregate the decoupling into those buckets because it moves at a different pace in different areas. But that said, I also think it's important to just take a step back, synthesize across those areas, and just look at the overall trend. And there, I really do think to some extent that you sort of know decoupling when you see it, and it's very clearly happening.
Yeah, that's really interesting. I mean, I would like to maybe even set the scene a bit more. How has the conversation about decoupling changed in Washington over the years, specifically pre and post the Trump administrations? I mean, you sort of have talked about the different buckets of decoupling, but it feels like decoupling sort of emerged as a political slogan, morphed from there. We've had de-risking, we've got decoupling back again. But, how has that history evolved?
Yeah, it's changed so fundamentally over the past decade or so. So the potted history here is if you rewind the movie to the late Obama administration, and the broad approach of the US government towards China at that time was still one of engagement. And there was no real talk of decoupling at this point. And you had even, in fact, some sense the opposite of decoupling. There were negotiations over a major bilateral investment treaty. There were regular, semi-regular talks between US and Chinese government officials, various agreements and understandings that were in the works. And then Trump comes and he delivers just an electric shock to the US-China relationship. And so, of course, you had the trade war, but you also had the US government essentially seeking to destroy the tech giant Huawei. You also had, beyond that, you had closures of consulates, you had a war of words over the pandemic, human rights. And just in general, by the end of the Trump administration, the first term, it was just a sharp deterioration of the relationship across the board. And that's where you get the talk about decoupling. And what exactly that means is a little bit ambiguous, and it's mostly Trump administration officials that are using it, but that's where it emerges. And then I think critically, when Biden takes office, he doesn't just go back to the way things were during the late Obama era at all. So he doesn't remove Trump's tariffs on China, even though that would have reduced inflation at the margin. And if anything, he ratchets up the controls on China's ability to import high-tech equipment even more aggressively, you could argue, than the Trump administration, and often in conjunction with allies. And they sort of back off the term decoupling. It's more sort of de-risking, which was originally a European term. But it's clearly, in some respects, sort of still moving in the same direction. And it's also worth noting that things were changing on the Chinese side as well. So we focus mostly on the U.S. administrations, but in particular, the U.S. assault on Huawei was a real wake-up call. And the attitude in Beijing became, we just cannot allow the United States to ever do that again. There is a massive amount of leverage that Washington has over us on technology, and that is unacceptable. And so they launched a very substantial industrial policy campaign that was basically focused on import substitution and the goal of replicating key supply chains within China. They would never call that decoupling, but that's effectively, in some sense, what it was. And now, of course, we're in the second Trump term, and there's been a very dramatic escalation on the trade front. And at this point, Trump is imposing tariffs that are so high that you could argue, in some respects, it nearly constitutes an embargo. And you're also starting to hear these other decoupling measures start to creep back into the conversation, such as the return of the issue of forcibly delisting Chinese firms from U.S. exchanges. So I think decoupling, that conversation is pretty clearly, it's been around for a while. It's probably here to stay. I think in hindsight, one key takeaway from that potted history is that in his first term, Trump was just very effective at shifting the entire political discourse in the United States towards a more hawkish decoupling direction, even including among the Democrats. And going back to the approach of the late Obama era now, it's basically unthinkable. And even today, you start to get this narrative creep where I would argue that the conversation is even now subtly moving with these new tariffs of, well, at some level, it was a mistake for us, the United States, to become so reliant on trade with an adversary of the United States. And that was sort of unsustainable, and we had to do something. So I think it's the decoupling discourse is here to stay.
Yeah, I guess I'm interested in, you talked about the Chinese perspective and how the Chinese think about it, and how the American position has sort of ebbed and flowed, and to reach this point now where the stage seems to be set for quite a messy divorce in these various buckets of coupledness, if you want to call it. But from the China perspective, has the view on decoupling evolved as much as it has in the US, or has it been more consistent?
I think it's evolved as well. I don't think to the same degree as the United States, but it clearly has evolved. So you just take a quick step back, and I think how the Chinese government is viewing this entire escalation in terms of Trump's tariffs. And when Trump came into office, tariffs were about 10% on all Chinese goods coming into the United States. And in February and then in March, he hikes them up by 10% and then another 10% across the board. And the Chinese government was clearly signaling that it wanted to negotiate. It didn't necessarily want to keep going down this decoupling path. And the open secret in Beijing was that they couldn't really get a consistent set of demands from the administration. They were initially told, well, this isn't really about decoupling, it's about fentanyl. And then they were told, well, this is actually about reducing the U.S. Trade deficit with China. And so the answers kept shifting. And then came the April 2nd tariffs. And you ask at a sort of a high level how the Chinese government thinks about this. There was this editorial in the People's Daily on April 7th. And People's Daily is the main state-run newspaper in China. And it was from this anonymous commentator. But everybody knew it was clearly from the Chinese government leadership. And it's clearly propaganda at some level, but I think it really did reflect their sincere views. And the editorial basically said, Trump's actions may have come as a surprise to the market, but it was not a surprise to us that we have been in a trade war and face this sort of a decoupling rhetoric for years now. And we have been preparing for a day like this. And now the day has come. And yes, we will continue to be open to negotiations with the US, but we are not taking any chances. And of course, there's going to be a blow to exports. Of course, this is going to be painful, but also the sky is not falling. We will survive this. And the other thing that I thought was noteworthy, and that really just speaks to their very broad perspective on US-China relations and why this is happening, why decoupling is going down this path. The editorial said there are the great changes that have been unseen in a century are accelerating, and that's a very clunky, awkward propagandist line. But anyone who covers Chinese politics knows immediately that phrase "changes unseen in a century," and it's a line that's been around for years. There's some debate on what exactly it means, but the broad content is pretty clear, and that's the US is in decline as a great power. China is rising. And that is a sort of great power transition that we have not seen in decades. And it feeds into this other talking point about the Thucydides trap that they have that basically says there is a real risk that the United States, the dominant power, will become alarmed by our rise, and it will suddenly become very aggressive toward us and start decoupling. And I mention that just because you talk to Chinese academics who often advise the government on policy, and you get this impression that they feel that the decoupling and the deterioration in US-China relations is a result of these deep structural and historical forces and patterns that yeah, the proximate issue is Trump, but don't overly focus on the figure of Trump. That this has been spread across multiple administrations at this point, and there's something much deeper happening. And yes, we should offer an olive branch to the United States, but don't kid yourself. It's probably just a matter of time before they became insecure, they turned hostile, and they sought to decouple. And I think there's, to be clear, there's a lot you can dispute in that view. And maybe academics and policymakers trained in Marxism are a bit more, they're a bit inclined to think in terms of theories of grand historical patterns. But I do think that's how they genuinely are holding the situation.
So when you strip away all the noise that we hear, and as you say, the grand rhetoric on both sides and the sort of different ways that both countries are looking at this situation, the reality is you have two countries pulling apart in various aspects, and you sort of talked about the buckets earlier. When you look at the numbers, as we like to do, what is the nitty-gritty here? So today, what fronts are we moving apart on, and what is there still to move apart on?
Yeah, so I think where you've seen decoupling move the furthest, the fastest, has been clearly in the realm of technology. That's where both the Biden and Trump administrations have taken very aggressive measures to limit China's access to advanced technology, in particular semiconductor chips. And related to that, there's been this decoupling in the realm of U.S. private equity and venture capital investments in China. And that's, in part for domestic reasons. The Chinese government launched a crackdown on a lot of major tech companies. It's halted new equity market listings in some areas. But I think a lot of it has to do with geopolitics. These investors face very long lockup periods. A lot could happen in U.S.-China relations in that time. There is a substantial risk they'll be forced to sell at some kind of loss. And so if you look at, you mentioned the numbers, if you just look at the amount of US dollar denominated China-focused VC funds, they raised more than $160 billion in the years 2018 to 2022. And now that is basically collapsed down to nothing. There's really just nothing more happening in this space. And so I think that the decoupling is sharpest there. I also think that you clearly see it. It's a little bit harder to put exact numbers to, but we see it when we talk to clients that are large investors, especially government-affiliated investors in Western markets. So, think of like large pension funds. They clearly feel some pressure to be withdrawing investments from China. And then the other sort of elephant in the room at this point is, of course, just bilateral trade with the tariffs kicking in. So as things stand, there is going to be a very, very sharp decline in bilateral US-China trade, nearing something like a collapse. The vast majority of bilateral trade just cannot survive with tariff levels of more than 145%. Even if that's lowered to something like 50 to 60%, it's just going to disappear. So as things stand, direct trade is going to decline substantially, but there's going to be an overwhelming incentive to reroute some of the trade, especially from China to third countries in order to avoid the tariffs. And I think, the other areas there's kind of like harder limits on the decoupling where you're not going to see it as much. So there's a few, but the one that I would call attention to is China's investments in the US in US treasuries. So for the US, it's not necessarily in the Americans' government's interest for China to be withdrawing from that market. That would put upward pressure on bond yields, might even have some negative economic ramifications, at least to some extent. For China, more importantly, the PBOC manages a de facto peg of the yuan against the US dollar. And it would be very hard to withdraw those funds from basically any US dollar denominated asset without an impact on the currency. So I think, over a very long-term horizon, the PBOC is clearly at some level worried about this, that it has a very large exposure, that the United States government, this is a potential liability. But for now, I think they're going to be very cautious about withdrawing funds from that market.
So it's really interesting because we've got the sort of trade decoupling happening before our eyes on a scale that we probably couldn't have imagined 2 years ago. We were talking about as a possibility 2 years ago, and now it's happening. And on the financial side, where there are many different sort of sub-buckets you can look at, we may see a partial decoupling. It's interesting that US Treasury Secretary Scott Bessent says that everything is on the table when he was asked about the possibility of forcibly delisting these Chinese companies in the US markets. I mean, it's interesting because I think if the US investors were forced to liquidate their holdings of Chinese stocks, I think that's about $800 billion today, per one of the latest Goldman Sachs estimates. But the Chinese investment in the capital markets in the other direction, which is the treasury stuff you're talking about, is huge, right? So that's a 1.3 trillion or 1.1 trillion, depending on how you cut various numbers in bonds, and that seems a lot stickier. I guess on the technology front, one of the things I'm interested in is how you disentangle the stuff on trade from national security, right? So the discussion that the trade war that Trump has sort of started was really all about this is a global trade war, we're fixing global trade imbalances, and now he's looking at the entire semiconductor supply chain and the electronic supply chain, and that's all about national security. So when you sort of put trade imbalances together with national security concerns and sort of technology, does that really leave much room to cooperate for these two countries?
Yeah, that's a really interesting question. So I think there has been cooperation, certainly in terms of export controls to China. And we've seen that. We saw that especially during the Biden administration. I mean, clearly what the Trump administration is trying now is that it is negotiating this series of deals with other trading partners. And the thinking is that they are clearly aware that there's going to be some transshipment from China. And so they're going to apply pressure on the trade front to limit those countries' dealings with China, not just in terms of technology flows, but also in terms of trade. We're, at least when it comes to trade, we're pretty skeptical about this. So the core problem is that for 70% of countries, trade with China is now more than their trade with the United States. And for about half of those countries, their trade with China is more than double their trade with the United States. So automatically, they don't really have a strong incentive to impose draconian restrictions on their trade with China. Again, maybe you could convince them to impose some restrictions in terms of their IP and their technology flows to China. But overall trade, that's a really tough sell, especially if they think that China's government might retaliate in some way, such as through tariffs or blocking market access and so forth. And you have this other problem that's emerging too, which is that after the first US trade war, Chinese exporters already started to transship goods through several other countries. So we count 9 in particular that we look at the data and there was this just clear correlation. So you see China's exports to these countries surge, and at the same time, their exports to the United States also surge. So it's not proof, but it's very circumstantial evidence that trade is flowing through there to the United States. And initially, that was really basic. That was just transshipment of, you send a widget from China to Vietnam, you screw a Vietnam made in Vietnam label on it, you send it on to the United States. But that is evolving very rapidly. And especially in recent years, it's expanded quite a bit. So now it's not just shipping those finished widgets over to Vietnam. Now it's suddenly Chinese companies that are buying factories in Vietnam. They're setting up production facilities. And it's not, they're sending intermediate goods from China, but then they're doing some pretty serious assembly in Vietnam and sending it on to the United States. And then after a while, what happens is that their suppliers to those factories start showing up in Vietnam as well, and they're setting up shop. And so it's a step-by-step iterative process, but the process is actually quite far along for some products. And Chinese supply chains are really embedded in some of these countries now. So I think you add it all up, and these countries, yeah, in some respects, they could probably play ball with the United States on some limited issues when it comes to decoupling. But there is a lot of incentives for them to push back on serious US demands to pull back from the Chinese trade and investment that they already have.
So, I mean, I think you're talking about this sort of idea of this grand encirclement strategy that that Washington is trying to rally the countries to work with it to isolate China. And, so the overarching trade war has become, let's all make deals and gang up against China. And I think Besant had floated this idea that perhaps Japan, South Korea, India, Vietnam, all these kinds of neighboring Chinese countries could come together as a group and use trade to pressure China on multiple issues. But are you basically saying that approach cannot work?
We'll see as the negotiations go along. I think some of the initial reports are that countries, even countries that are very close allies with the United States, like Japan, have pushed back on some of these requests from the American administration. So I think my starting stance would be pretty skeptical, but we'll see as the negotiations go along.
Yeah, I'm really confused because I thought the Trans-Pacific Partnership was basically supposed to be America's version of trying to do this, under Obama. This was this big overarching trade deal between Asian economies and the US that deliberately excluded China. And that the aim was to contain China and shift the power of Asian trade away from China. But Trump withdrew from that agreement on his first day in office in 2017. So it's sort of interesting that they're coming back to that strategy in a way now. But yeah, I agree. There's been a lot of skepticism. I think one of Xi Jinping's, he's been doing the kind of the charm offensive around Southeast Asia. I guess that's the next question, really, which is what are Beijing's tools to really neutralize this approach that Washington is now taking to kind of encircle it?
Yeah, sure. So they have a lot of tools if they so choose. So they've got the most obvious one would be if other countries sign pretty stiff measures with the United States to limit their trade with China. China could, of course, impose retaliatory tariffs on them. They could control exports, especially of rare earths, critical minerals. You can constrict some of the market access that these countries have to China, including, potentially down to the level of targeting individual firms. So the sort of archetypal example of that would be when South Korea agreed with the United States to deploy that missile defense system, that Beijing clearly essentially more or less destroyed low-tech groups' operations in China. So there's a lot of tools that Beijing has. And just like you said, I mean, Xi Jinping is clearly on a charm offensive right now to try to head this off. So it's not just sticks. They also have carrots that they can use in terms of more market access to China. But that said, I think it's going to be an uphill battle for the American administration. And I think that China is going to be kind of pushing on an open door because, like I said, there's just a lot of incentives for these countries to continue doing business with China. And they're going to want to preserve those relationships.
Yeah, it's really interesting. So let's see what all those trips that Xi Jinping has made to Vietnam, Malaysia, and Cambodia will yield. But it looks pretty tricky on both sides, I think. What about China's domestic response to all of this? Because, I can't not ask you this question. I mean, do we still think that China's President Xi Jinping is going to unleash the big bang stimulus that we've been waiting for to soften the blow from the trade war? But also, we've been waiting for this sort of response for a long time from China because the economy was already slowing.
Yes, is the short answer. I think that, more stimulus is clearly coming. And I think part of the reason that they have not done more since Trump escalated on April 2nd is that there is already stimulus measures that they've announced that are going to flow through. So in March, the Chinese government had its annual legislative session called the National People's Congress, and that's where they set the budget for the entire year. And in that budget, they announced a stimulus of about 2.4% of GDP. So it's not a bazooka, but it's not small by any means either. And you think about, so if that's the size of the stimulus that they already had planned, what's the sort of hole from tariffs that Trump is going to cause? Well, if you look at China's manufacturing exports to the US, it's roughly 2 to 3% of GDP. So calculating the size of the blow is of course more complex than that. You have second and third order effects, but just at this very basic ballpark level of sizing the blow, you could argue that it's more or less in line with the stimulus that they've already announced. And the final part of the policy calculus that really feeds into why policymakers are not announcing more is that there's still a tremendous amount of uncertainty, right? It's very possible in the near future that Trump will back down in some way on the tariffs. It's possible that he does not. It's possible that a huge chunk of trade just gets rerouted from going to the United States to these third countries. So actually the blow to Chinese exporters is not that bad because yes, we're exporting less to the United States, but we're actually exporting more to the rest of the world now. So there's a tremendous amount of uncertainty. When you add it all up, what Chinese policymakers are signaling, including in the Politburo meeting late last week, is that they're going to continue to deliver on the fiscal stimulus that's already in train. And that should probably blunt much of the immediate damage. That will buy them time to assess how bad the blow is likely to be. And then they have very clearly indicated that later on in the year, they could just dial up the stimulus as needed.
Yeah, I think the second and third order effects there are really interesting because when you look at all the forecasts out there in terms of the impact on the Chinese economy and the GDP blow, it's really about the direct bilateral trade blow. And so really what all these other countries, these neighboring countries do in terms of their trade and their imports from China and their transshipments, I think that's not really even been baked into forecasts that the global investment banks are making at the moment and the economists, because they can't do that. And so actually it could be a lot worse than the impact could be a lot worse, or it could be a lot better. It just depends. We have to wait and watch and see which way that goes. I mean, I guess really to wrap up, one of the questions I'd love to ask you is there any scope for us to go backwards? Well, backwards may not be quite the right word. Is there any scope to sort of reverse some of this decoupling or is the damage done?
I think there is, just in the sense of it depends if we get a trade deal. So that's a clear area where you could do a bit of reversion. I think that the Chinese side would certainly be open to a deal. They've clearly indicated that they are willing to negotiate. I realize there's kind of a standoff now and who calls whom first, but they're broadly speaking, their position is that they have a lot of weapons to wield in a trade war, and that's absolutely true. But fundamentally, they are better off de-escalating still. I think that a reversal in other areas is much more likely. So beyond a trade deal, on the U.S. side, controls on technology exports to China they're essentially a ratchet. They can really politically only tighten. They can't really loosen. And I think they will continue to tighten. And I also think, somewhat related to that, I think that US investors, whether it's PEVC or large institutional investors that are in some way sort of risk averse or affiliated with the government, I think they're going to still have pretty serious concerns about putting money into China. And so I think those areas are not likely to reverse. Maybe it slows going forward, but not reverse. And then on the Chinese side, rightly or wrongly, I think that the message that they take away from all this is pretty clear, which is that the American side is now just seeking straight up containment. And that is going to shape a lot of their policies in the coming years. And I think, the official stance is that they do not want decoupling. But in practice, you could argue that they've done a fair amount of decoupling themselves. And the People's Daily article that I mentioned even sort of advertised that, our trade with the United States is not nearly as important as it once was. So therefore, you don't really have to worry too much about the blow from the United States. And clearly, just a major part of their industrial policy is replicating supply chains specifically so that they're insulated from the United States. So in the United States, at the end of the day, you have a large contingent of policymakers that do want decoupling and that openly espouse it. In China, they definitely do not openly espouse it. They call against it. But some areas, they're kind of in tacit agreement that there's going to be some decoupling that is inevitable and maybe even from their perspective, somewhat desirable.
Yeah, that's really interesting, especially as China seeks to become dominant in a number of sectors and technologies globally. It seems that is not particularly conducive or compatible with a strong US relationship, given it sort of just pitches them against each other in various ways. So, Chris, thank you very much on that cautious note, I would like to thank you very much for joining us and taking the time to provide us with so much insight.
Thank you for having me. It's always a pleasure to talk to you.
That's all we have time for this week. Thanks to Yuna and Chris for that fascinating discussion. And as always, thanks to you for tuning in. This podcast was produced by Oliver Tasich in London. You can listen to a new episode of The Big View every Tuesday on the Reuters app or your favourite platform. Don't forget to check out our sister podcast, Viewsroom, every Thursday, as well as the other great podcasts from the Reuters team. Reuters World News, your daily dose of the biggest global stories, and Reuters Econ World, a weekly deep dive into an economic concept behind the headlines. If you liked what you heard, please follow The Big View and let us know what you thought. And check out our views on the biggest stories in business and finance every day at breakingviews.com and reuters.com.